Welcome back to Investing Talk Podcast.
Great to be here.
Today, we are diving into MP Materials, the big rare earths player here in the U.S.
That's right. And the question on everyone's lips really is now a good time to buy?
It's a fascinating one. So complex. You've got these, well, difficult commodity economics on one side, and then this huge wave of government and, frankly, major corporate backing on the other.
Exactly. Conflicting signals everywhere.
So before we try to unpack the financials, the recent market moves, and some really quite incredible news, just a quick reminder to you, our listener.
Yeah, please do hit that subscribe button if you haven't already.
And like this analysis, leave us a comment below. Let us know what you think.
And definitely tell us if there's a specific company you want us to dig into next time. We do read those comments.
Okay, let's get into it. MP Materials.
Right. So maybe start with the basics.
Right.
What exactly do they do?
Good idea. So MP Materials runs the Mountain Pass facility. It's in California.
And critically, it's the only rare earth separation facility of any real scale in the entire Western Hemisphere. That's
Right.
key context.
Absolutely key. Their main game is neodymium praseodymium, or NdPr.
The NdPr, yeah. The stuff that goes into the super strong magnets.
Exactly. Think EV motors, those big wind turbines, sophisticated electronics. It's vital for the energy transition.
Which explains the strategic importance. But let's maybe look at the financials first, because honestly, the income statement looks a bit rough right now.
Yeah, you have to start there. The numbers, well, they paint a picture of that cyclical pain we mentioned, trailing 12 months revenue. And it's taking a big hit. Dropped over a third compared to last year.
From about $356 million down to, what, $242 million recently?
That's the one. And that revenue drop pushed them into the red.
Yeah.
A net loss of over $101 million.
Which translates to a negative EPS, right?
Right.
Around minus 62 cents.
Yeah. And operating cash flow has, well, it's fallen off a cliff too. Big drop there. Shows real pressure on the day-to-day.
It really does. Normally, numbers like that would hammer a commodity stock.
Right. You'd expect it to be tanking.
But the share price tells a different story. And that's because you absolutely have to look past the income statement here. Look at the balance sheet.
Okay, so what's the story there?
Liquidity, just sheer liquidity. They're sitting on $1.28 billion in cash and equivalents.
Wow, okay. And the debt.
Total debt's around $593 million. So they are strongly net cash positive. Huge margin there.
That gives them a cushion, definitely, for R&D, capital expenditure.
Resilience. It buys them time. But your point earlier is valid. How long can investors just watch that cash sit there while the core business struggles?
That's the tension. And the struggle comes down to that core problem, doesn't it? Pricing power? Or lack thereof.
Precisely. The financial pain we just described, it's a direct consequence of China's market dominance.
They control, what, over 80% of the separated rare earths globally?
At least. And that lets them pretty much set the price. MP Materials has historically been just battered by those price swings. That's always been the big threat.
Okay, so income statement looks bad, balance sheet looks strong, but raises questions.
Right.
But if the market only cared about current earnings, the stock wouldn't have, well, more than doubled since the middle of this year, 2025.
Exactly. Which brings us to the other side of the coin, the game-changing part.
The strategic catalysts. This is where it gets really interesting.
This is where MP Materials stops being just a mine and becomes, well, a strategic national asset. It happened fast, too. Q3 2025 was pivotal.
Driven by these big public-private partnerships.
Unprecedented ones, really, all focused on shoring up the U.S. supply chain.
So walk us through the big announcements. What happened in July 2025?
Okay, 3 huge things. First, the U.S. Department of Defense, the DoD, finalized a $400 million equity investment.
Equity, not a grant.
Equity. They took an effective 15% stake, made the DoD the single largest shareholder. That aligns interests very directly.
Okay, that's massive. What else?
Second, Apple. Apple committed $500 million, $500 million to a long-term deal.
For what specifically?
To buy American-made rare earth magnets from MP Materials. And interestingly, to partner on advanced recycling tech.
So commercial validation on top of defense backing. That's huge. From Apple, no less.
It signals a real shift towards supply chain security, not just chasing the lowest price from China.
But the killer blow against that cyclical risk, it has to be the price floor, right? That feels like the linchpin.
Yes. That is probably the single most important detail in this whole story. You're absolutely right.
So what was the deal?
The DoD also signed a 10-year offtake agreement. They committed to buy 100% of the planned output from MP's new magnet facility, the 10X facility.
Okay, guaranteed demand.
But here's the crucial part. The deal included a 10-year price floor for the key ingredient, NdPr oxide, locked in at $110 per kilogram.
$110 a kilo for 10 years. That's basically an insurance policy against Chinese price dumping, isn't it?
It absolutely is. It shields a core part of their future revenue from those commodity price shocks we talked about. It builds in a favorable margin.
That removes a huge chunk of the risk, the existential risk, really.
Totally. And having that guaranteed revenue stream, that visibility, it unlocked a flood of capital.
Right, because the risk profile changed overnight.
Exactly. So after those deals, MP secured another $150 million loan from the DoD for facility upgrades.
Right.
And then they went out and raised $1 billion in commercial debt financing.
Wow. The market clearly liked the DoD backstop.
It gave them the confidence and the capital to make a really bold move. They announced they were stopping all sales of rare earth concentrate to China. Full pivot.
Focusing entirely on domestic and allied markets now.
That's the plan. It all points towards the long-term strategy, vertical integration.
Moving up the value chain. Not just digging stuff up, but making the high-value magnets themselves.
Right. That 10x magnetics division is the future. That's where the margin expansion is supposed to come from. That's how they reduce exposure to raw commodity prices.
And the target is ambitious. Tripling magnet output by 2027.
That's what management is aiming for. But it's a massive undertaking. Which brings us neatly to the market signals and the technical picture.
Because the stock price is clearly pricing in a lot of this future success already.
Heavily. But the near-term technicals are, well, a bit mixed. They reflect how fast and how far the stock has run recently.
Yeah, you see that in the price, around $79, getting close to that 52-week high, near $82.50. And if you look at momentum, the RSI, the Relative Strength Index, it's up over 70.
70.22, yeah. Which, traditionally, that's flashing overbought, suggests the rally might be a bit stretched short-term, maybe due for a breather.
A pullback, perhaps. But then you look at other indicators.
Right, the short-term warning is there. But the longer-term trend indicators, they paint a different picture. MACD, ADX, they're strongly positive.
Suggesting the underlying trend is solid.
Yeah, this isn't just a quick pop. There's real momentum here. And look at the moving averages, 10-day, 20, 50, 100, 200-day, all signaling buy. The market seems to be consolidating those gains.
So, short-term caution, maybe, but a strong underlying bullish trend supported by policy. Resistance up near $82.
But significant support seems to have formed around $70 now. Looks like buyers are willing to step in on dips.
Okay, which leads to that valuation question again. That forward PE, it's eye-watering. 263.
Yeah, it's huge. It tells you the market is completely ignoring today's negative earnings.
It's pricing in massive success years out. Strategic certainty trumping current fundamentals.
Absolutely. So what does Wall Street make of this whole situation?
Are the analysts buying the story?
They're divided, let's put it that way. The consensus is a moderate buy based on about 12 analysts.
Moderate buy. Okay, but the price targets?
All over the map. Seriously wide range. The low is down at $29. The high is $82.
Wow, that's a huge spread.
It is. The average target is around $68.33, which, interestingly, is actually below where the stock is trading right now.
So the average analyst thinks there's moderate downside, despite the DoD backing.
It shows just how much the market is struggling to value this thing, balancing the strategic guarantees against the, well, non-existent current earnings.
And that uncertainty highlights the risks that are still very much present. The government backing is huge, but it doesn't make everything risk-free.
Not at all. Execution risk has to be top of the list, right?
Building out that 10x magnetics facility, that's a massive industrial project.
Colossal. And it's complex stuff. The U.S. hasn't really done this at scale for decades. So you've got risks of delays, cost overruns.
Technical challenges in getting the quality and volume right.
Exactly.
Yeah.
If that ramp-up stumbles, even with the DoD support, investor confidence could evaporate quickly.
And the flip side of those big DoD and Apple deals, customer concentration.
That's another one. Relying heavily on just a couple of huge customers is always a risk. If anything happened to those deals, especially the government one with the price floor,
it would undermine that whole stability narrative, plunge them right back into uncertainty.
For sure. So let's try and pull this all together, synthesize it. You've got this classic split view, right?
Yeah. Weakness versus strength.
The weakness is clear. Negative earnings right now. That sky-high PE ratio definitely looks overvalued based on today's performance.
What, the strength?
It's pretty unique. Strategic asset, rock-solid balance sheet with net cash, and these huge policy tailwinds. the DoD investment, the Apple deal, and crucially, that price floor providing revenue certainty they never had before.
So wrapping it up for you, the listener who's asking, is now the time to buy MP materials? We've got these two very different narratives playing out.
Which leads to two different ways to think about it, depending on your time frame.
Okay, so overall rating first.
Given the high volatility, the stretched valuation, but also the massive strategic support, the overall research rating comes out right in the middle. Let's call it a 5 out of 10.
A 5/10, okay. And for short-term traders?
Well, the volatility and momentum are there, which traders like, but those technicals, like the RSI being over 70, scream caution. Risk of a pullback is high. Maybe wait for a dip towards that $70 support. Patience seems wise short-term.
Okay, and for the long-term investor, someone willing to look past the next few quarters.
This is really only for investors with a higher risk tolerance. You have to believe in the strategic story, the critical minerals theme, the whole U.S.-China decoupling narrative.
And you need patience. Lots of it.
Mandatory. You're not buying the company as it is today. You're buying the potential of that magnetics division, the hope for much higher margins down the road, maybe in 2025, 2026, as analysts expect.
So patience is the word. And what should investors be watching for next? Key catalysts.
Definitely keep an eye on the Q3 earnings report that's scheduled for early November 2025.
Looking for any early signs of margin improvement from the new initiatives. Progress on the ramp-up.
Exactly. And then shortly after that, we'll get the institutional 13F filings. That'll show us if the big money, the large funds, are actually buying into this strategic narrative or if they use the big run-up to take profits.
Good indicators to watch. It's really been a transformation, hasn't it?
Incredible. A company struggling with commodity prices suddenly becomes this linchpin strategic asset backed by the government and industry giants.
The valuation is stretched, no doubt. But those policy tailwinds are undeniable. They provide a floor we haven't seen before.
Yeah, the recent news really cements MP materials as the cornerstone of U.S. rare earth strategy. It's hard to overstate that.
So, final thought to leave people with.
Okay, here's the thing. To truly justify this valuation long-term, MP Materials probably needs to prove it can succeed beyond just U.S. government support.
Expand commercially, internationally.
Right. So the question for you to really think about is, can MP Materials leverage this newfound strategic importance, this visibility, to land major commercial deals? Think European car makers, wind energy companies over there, as that whole Western decoupling from China gathers pace.
If they can become a truly viable global alternative, not just a U.S.-centric one,
then maybe, just maybe, the fundamentals can eventually catch up to this very high stock price. That's the multi-billion-dollar question.
a great question to ponder. Excellent analysis. Thanks for walking us through that complexity.
My pleasure.
And thank you for joining us. We hope this gives you some valuable perspective for your own decisions. We'll see you next time on Investing Talk Podcast.